G'day, folks. In periods of hyperinflation, extreme volatility across every asset sector, so many investors are going back to that root of investing. We're talking ETFs. We're talking those juicy dividends for that passive income while you sleep, so you don't have to worry as much about the volatility of the stock price, and you can collect cash flow to reinvest into your favorite companies. But being a Canadian, I wanted to primarily focus on the Canadian side of the border today, so I put together a list of over a dozen large and mega cap stocks, because they come with more security, that are paying dividends over 4%. Now, in this current market environment, it is harder than ever, like way harder than March of 2020, to find high yielding dividend stocks that come with reliability, because typically anytime I've touched a yield over 6%, I've got slapped upside the head at some point, and I lost that yield as they cut it, because again, it's a rarity finding stability in high yielding companies. But if this is a conversation you appreciate, even if you're from the US side of the border, consider hitting that like button, folks, because there's two ways that I go about finding these dividend stocks. If you wanted to do your own research for, say, we're going to be primarily using the stock screener today, but you can also go to basically Google and just look up high yielding Canadian ETFs. You go into those ETFs, you look at the top 10 holdings, and let's be real, the hedgies out there, you know, all those ETF investors, they've done a lot of homework and they're probably going to offer you some better picks. But I mean, that's one option. But today I wanted to pick the larger list and go through all the mega caps and put my kind of opinions aside and just see what existed out there. Now, we're going to go through them all, but obviously I'm going to tell you what ones I like the most. So if we go into the stock screener, we look up the region in Canada, we can see that there's 3,465 stocks. As soon as we wipe it out to mega caps and large caps, there's only 224. And as soon as we put a forward yield in there of 4% or higher, we can see that narrows down to 95. If we hit search, guys, there's a large list of companies that go into all different directions, from option kind of based trading companies and stuff like that. But I've kind of just weaned out the companies that are real companies, not like indexes that are just primarily trading options, let's say, or something that's a little bit more fishy. And these are all, again, large and mega cap based companies. So I went through, I put the list together. Let's start off with the energy sector. Now, I'm not a fan of oil companies, guys. I always find that's a very cyclical industry. Typically, oil does very well, then it doesn't do very well, and we constantly go through this up and down periods, and we're starting to trade toward the higher end of oil right now, so it might be a little bit fishier to start buying into these without taking on a little bit more risk, because it's, again, not like March of 2020, but we're still getting really healthy yields, even coming from the likes of Enbridge here, which is one of Canada's top 10 largest companies with a $100 billion market cap, a starting yield of 6.5%. But again, guys, it has not hit those all-time highs that it saw back in 2015. But if you're buying into these kind of companies, I recommend not even worrying about the stock price, because you're purely buying them for the return of the yield. This leads into one that I used to hold called Suncor Energy, which I never actually wanted to buy, but because I held the Canadian oil sands that inevitably got bought out by Suncor, I was kind of forced onto these shares. And we're going years back, like several years back, and I ended up selling this. But this thing today, guys, Suncor paying a 4.46% yield, $50 billion company, by no means a small cap player. Now, a lot of you are big fans of the pipelines out there, I've noticed, like Pembina Pipeline has been mentioned in the comment sections many of times, with a 6% starting yield here, guys, and then along with TC Pipelines, which also has a 5.24% starting yield. But it looks like over history, guys, over Pembina, let's say, TC has actually done a pretty better job with the stability of the stock going up, but recently a lot of volatility, probably based off the current markets and how volatile oil's been. But let's move into a sector I primarily like, and that is obviously the financial sectors with my banks. Now, there are really, kind of shockingly, only two banks right now paying over 4% yields. I mean, you could have went back not even a year ago and you could have threw a dart at any one of these banks and have been getting really good yields. But now we're starting with Bank of Nova Scotia, one that I primarily hold, paying a 4.32% dividend yield and is currently sitting toward its all-time highs. Next in line, this one just dropped under 4%, and that is obviously Canadian Imperial Bank. These are now the two highest yielding Canadian stocks, which blows my mind, because I remember in March of 2020, we were really advising people to pick these things up because they were paying upwards of 6 to 7% yields. Those days have obviously come and gone. We could really use a retraction in financing, but obviously people know as interest rates go up, banks tend to make more money. That's why as we head into an interest raising environment, we see the banks continuing to push all-time highs. Now, another sector I really like, and because we're in the Canadian economy, guys, where we have one of the fastest growing populations of the G7 countries, I really love anything financial or telecom related because we don't have a lot of big players here, especially in the telecom space. I mean, you can probably name a few like Rogers, like Bell, like TELUS. There's just not a lot. So there's not many options for all these people flooding into Canada to choose from. And that's why these have typically done pretty well, starting off with BCE, Bell Canada here, guys, starting at a 5.6% yield. Pretty incredible. A lot more volatility, which is why I prefer TELUS, because if we take a look at the long-term chart on TELUS, very stable here. Starting yield is 4.14%, not nearly as attractive. But again, guys, we're wiping out a lot of the volatility in the company. But moving into another part of the financial sector, let's talk about insurance. This is one that I haven't touched into yet. I've been inclined to think about doing it, but I've never really understood insurance. So it always kind of scares me a little bit because you don't know what you don't know. And sometimes if you're buying individual stocks, you got to be careful playing in realms you're not familiar with. But Manulife Financial Corp, guys, this one has been trading relatively flat for the last 5 years, but at a 4.88% yield. If yield is all you're looking for, probably not going to go wrong with this one at a $52 billion market cap, guys. It's not small whatsoever. And then on the other spectrum, we have things like Sun Life Financial here, guys, paying a 3.86%, also recently just dropping off the list of 4% yielders. But compare the two, guys, I think Sun Life looks like it has been a little bit more stable over time. But either way, that's the financial sector according to the stock screener. Now, let's talk about the utility sector. Now, I like utilities. Over energy, utilities I can wrap my head around because these are primarily just companies keeping the lights on at your house. They're just kind of power generation and transmission centers, everything from renewables that we'll look at, a lot of things in between. But Canadian Utilities, not one that I've explored a lot, but it has been flatlining since 2014, but 5% dividend yield is trading down from its highs right now. $9 billion market cap, not really in the mega cap range, but utilities are good for that cash flow. My personal favorite, Algonquin Power, the only other utility right now, which is paying upwards of 5% that I would recommend buying, which I can't recommend anything. I'm not a financial advisor, but it's one that I have personally been buying into, trading 20% off its highs back of 2020, has a lot more stability over the long running of the chart. So this one's a great place to start capturing a really decent starting yield. And this one's very, very diversified because it has water-based utilities, transmission line-based utilities, natural gas-based utilities, renewables with wind and solar. So this is a very nice diversified transmission-based company. So love it, love it, love it. Now let's move into a sector that we've talked about on this channel quite a bit recently. That's gold. There's not many gold companies out there right now that are paying high yields, but B2 Gold Corp, which again, kind of smaller cap at 5.3 billion, with a dividend yield of 3.96%, no one's complaining. It is trading rapidly off its highs here. And considering we've talked about how profitable gold mining's become and how this company's revenue is still hitting all-time highs, I'm kind of shocked that it isn't trading up higher. But for as long as gold keeps pivoting upwards, I don't see why you couldn't be bullish on this sector as well. Now, my favorite sector amongst all of these guys, obviously the real estate sector. Canada is famous for its real estate, especially considering it's one of the fastest growing places to get rich with real estate right now. But personally, I can't afford to buy $1 million home here. So I've been primarily focusing on real estate investment trusts. And on the top of the list, one company I'm very comfortable buying, even at these levels, of course, being RioCan at a 4.3% yield, $7 billion market cap, and giving you exposure to the best real estate Toronto has to offer. If you just want cash flow, you're not really worried about stock performance, this is a great place to start here, folks. And keeping up with the kind of higher yields, maybe I should mention SmartCentres because it's very similar to RioCan. This is one that I've been thinking about buying into, but I really want to get through earnings season first. This one's going to have earnings coming up very shortly, but this one starts at a 6% yield, a little bit more attractive, a little bit lower of a market cap, but similar kind of exposure to the Canadian real estate market. Now, if you're more kind of not into the mall and residential kind of units, you can go with some industrial, which have really outperformed over the last 5 years. And Dream Industrial, guys, up 80% in 5 years, starting yield 4.42%, really low PE, $3 billion market cap. I don't think you're going to go wrong with these guys, and it's nice that they're pulling back a little bit. So this should start making it more intriguing for newer investors to come in. Now, there are two other companies I have been looking at adding to my portfolio. One primarily is Allied Properties. Now, this one has done some readjusting, but when I looked at their current portfolio with a 4.16% starting yield and a lot of stability in the stock over time that historically has gone up, I feel like this is a good parking place because anytime I look up real estate investment trusts in Canada, the ETFs, I'm always finding Allied and Dream Industrial and a few of the other ones at the top of the list. There are some ones like Granite Real Estate Investment Trust, but we're obviously looking for yields over 4%. And like I said, there's just not a lot of companies in any of these sectors offering those kind of yields. yield. So this could be a good company to look at, trading off its highs, has an incredible balance sheet. And a lot of you have also mentioned H&R. Now, this was primarily an office-based REIT, and it looks like it's still trying to recover from a lot of the issues that it had in the pandemic. So just based off the historical chart price here, I'd be a little less inclined to buy this one over something like Allied or RioCan or SmartCentres, because the yield just isn't as high. But typically, because it's probably gone through most of the pain by now, its balance sheets become a lot more robust. Something to look into and try and figure out, maybe based off the earnings, perhaps why it dropped, what's going on with this company, and just pay closer attention to it. But those right now, guys, are the highest yielding mega cap and large cap Canadian stocks that'll give you over 4%. But at this point, I want to pass the question off to you. What are your favorite high yielding Canadian stocks? What ones do you have? Even if they're under 4%, I'd love to hear about it in that comment section below. But in light of this, stay cool, stay awesome, and as always, I look forward to catching you in the next one.